What is up, everyone? This is Vlad, the crypto trader here. I've recently been working on a crypto trading bot where, essentially the idea is to automate the trading process by taking the trading volume, so kind of the interest of the buyers and the sellers, and also the momentum of the candles. So I look at what the price action is doing, so how the market is moving, and based on that, I determine how to act. Or better, how the bot should act. So today we're going to go through the results. I went over different time frames for the bot and to see how well it would perform on which one of them. And this is what this video is essentially going to be about. Yep.
Here on the results side of things, and as you can see, the results have been split in two main groups: the single confirmation and the double confirmation one. And in my opinion, the easiest way to actually show you what the difference is that if you look at the charts. So here's an example of a single confirmation signal, and if we zoom in on this example right here, so one signal is made up by these two candles, and afterwards, the signal kind of exists. Obviously, it still needs to be traded after that point, but this is kind of our initial starting point. So we have the signal right here. So this is our signal confirmation. And then what the double confirmation is, let's just zoom in right here. It's, you know, it is just two single confirmation signals really close to each other. So I asked myself, what if we tried to find two signals right next to each other, right? Like this, so we could actually be even more sure that our assessment of the direction is correct. So we have these two signals, but we only are gonna trade based on this second one, not on this first one. This first one is kind of our first uh, alert saying, yeah, look, there might be something interesting here. But then we actually only trade the second one. And here are generally there are much less signals on double confirmation because of course we need to have two signals really close to each other, and that's not always the case. And you can actually see it positively influencing here on the first on the 1 hour time frame. So the signal confirmation performs really low with minus one 1400 R, so risk units. So to bust your account, you need to lose 100 R. So do the math yourself. The 1 hour still performs really bad for your portfolio, but it performs much better compared to the signal confirmation one. But how do I actually arrived at these results? What I needed to do, and for that, I think it's simplest if we pick this Zill example here. So this one, which I have charted here. So this is the same signal that we see on this chart right here. It's exactly the same one. And this is our signal, right? So as I've told you in the past, we have this signal, but we still need to trade, right? So we still need to put our orders in. Where do we take our profits? Where do we take our stop loss? And here this is how I've done it. So the logic behind this is we take the high here and our low of the signal, so of these two candles. Let's get rid of this one. And then we put orders at the Fibonacci retracements. So we put one order here, we put an order there, here, there, and then the low here becomes our stop loss. So this is 2/3 of the trading idea put in advance. So we have our entry points and we have our stop losses. But where do we actually take the profit? And this was exactly my question, and the reason why it actually took me so long to arrive at these results is because I went over all the time frames and I iterated over all of these take profits. So there's 5 right here, and I had to go over every chart, every time frame, asking, running the algorithm for all of these different take profits. Actually, these take profits in my program have a slightly different name, but just to not confuse you here. So the 1.618 extension, fib extension, is actually the extension 6. In this case, the extension 2.0 is actually the extension 3. So it would be this one. And so the same logic applies. So the 1.0 is actually the 2, and so on and so on. And so, as I've said, I iterated over every chart, every time frame that there is, and these are the final results that we've arrived at. And when you see the results of the 1 hour time frame, for example, it is really disappointing feeling because it was something you've worked on for quite a long time and then you still get a negative result. But I was really pleasantly surprised, as you might expect, with the results of the 4 hour and the 6 hour at the two extensions. So the two extension, again, it would be the three extension here, which is quite far away from your initial entry point. But who cares? Because if you go over all the charts of the past 3 years available on Binance, this on the 4 hour chart, and entering, as I've explained, placing your stop loss and taking your profit at the three Fibonacci extension, you'd get a result of 533 risk units back, positive risk units from that starting period of time. Of course, this is only historical data, but I'm not going to bullshit you and tell you that, this actually doesn't give me results for future performance, because it actually does indicate results of future performance. That's why you do this backtesting in the first place. And I'm actually, as I've said, again, I'm really happy with this result. It was a lot of hours and time spent on it, and I got something positive out of it, which was exceptional.
So there it was. The best result that I got was on the 4 hour time frame with the single confirmation algorithm giving a 533 R of reward over 3.5 years, something like that, over all the trading pairs on Binance. So I'm really happy with that result, but I'm still, not completely finished with this, as I could still implement some other processes, such as, for example, looking at how often is one trade with this strategy successful, looking also, for example, at the average loss and at the average gain, and things such as hit rates, right? So there's quite a lot of potential work in there, which I'm looking forward to get onto, and I'll definitely let you guys know on how this is going, because this is kind of like the setting stone my of my skills in Python applied to something I like, which is trading. So it's something that at times takes a lot of my effort and energy, so I'll let you guys know how it's progressing in the future. In case you like this video, definitely leave a like and subscribe to my channel. Also, in case you're interested about this exact type of content, also leave a comment down below. I'm more than happy to connect with you. I'm more than happy to answer some of the questions you might have. And as always, I hope you took some value from this video, and I hope to see you the next time around. Take care.